What's going on, traders? Good afternoon. Hope you're having a good trading week. I wanted to briefly go over GBPUSD. So just getting right into it. Um, Starting off from a fundamental perspective, we know GBPUSD, it gained some strong traction on Wednesday. We've seen some massive USD selling. This upbeat market move is definitely a key factor in undermining United States dollar. Now, the uptick in the U.S. bond yields, it didn't do much to spike any bullish moves. I know that some people might have expected some kind of a downward movement or at least some more pushes to the downside in regards to GU. But it's worth recalling that, the UK central bank, it pushed back expectations for a negative interest rate, which could have very well provided that strong lift to the British pound. And jumping back to US, in regards to that most recent monthly job report release, it's definitely raised some doubt about how fast the U.S. can recover from an economic standpoint. And apart from that, this overall underlying bullish sentiment right now in the markets is definitely undermining the greenback's safe haven status. So that's a lot to consider. Now, from a technical standpoint, I want to share some things with you because we can definitely expect some bearish movement still, possibly from a short-term perspective. And we're going to get right into it. I'm going to start off on a monthly time frame. So, just getting right into it, we see this structure right here, right? This previous resistance. We've seen price reject this zone multiple times, and it's only right to expect a pullback from this area at some point in time, right? We know that any previous resistance could be turned support and vice versa. Now, more importantly, we see this W formation. Now, I know you see this overall W formation, but bear with me. You see this right here, this W formation right here. We see the impulse, retracement, impulse, and what's next, we can be expecting a retracement. The question is when. So a common practice, obviously, to measure a retracement is to take a Fibonacci on the impulse. And to measure an impulse, you do the opposite, right? So we're going to take our Fibonacci from the swing low to the swing high. And immediately you notice that this 38.2% Fibonacci retracement level lines up very well with this structure, this zone that we've marked off. So from a monthly perspective, at some point we can expect a pullback, which would in turn mean a shift to a bearish environment, right? Now, taking this down to a weekly time frame, things get more clear. We see this impulse, retracement, impulse, retracement, impulse. Now, this most recent structure that was broken was right here, right? It was right there. Now, something I want to note right here is this. Obviously, we see that we're in a bullish environment. I can't stress that enough. We see higher highs and higher lows being formed. Very good market structure. But as I said before, we're anticipating a retracement at this point. It wouldn't be smart to buy at a high right here. So regardless, even if you were looking to buy, you'd be waiting for a retracement to buy. So even on a weekly, we can anticipate some bearish movement, right? So taking this down on a daily, we start to see where that move can be formed. Now, we see price starting to come down. And if we take our Fibonacci from the swing low to the swing high, what do we see? I know what I see. I see price right now lining up once again very nicely with the 38.2% Fibonacci retracement level, but this time on a smaller structure on the daily, right? We did this on a monthly. We seen where price could be pulling back in this area, which was a 38.2 retracement level, but on a higher time frame. So even with this, we still are expecting a pullback, right? Now, just because I'm saying that doesn't mean it's going to happen, but I'm just sharing my thoughts right now on GU. So what I did is I marked this off because we're going to take this down to a 4-hour and see what we see on the 4-hour, right? On a 4-hour time frame, you can see this M formation or this double top, right? See this double top? What I'll do is I'll change the format of my price action from candles to a line, and you can see that there's this double top. Now we can be expecting just how we expect on a monthly that pullback to the neckline and possibly a move to the downside, or because it's in a very strong bullish environment, it can make this push to the upside, break through, and find support and continue to the upside. Now, I don't expect that to happen, but as with these markets, you want to be reactive and not predictive. You want to trade what you see, not what you think. So in regards to that, what I'm going to do is I'm going to mark off these levels, right? So you can see that obviously this previous support was broken, right? This previous support was broken, so we can expect price to at least come back to this area to continue back to the downside, if that's what it's going to do. But I'm going to share something with you that I did this morning from a 1-hour perspective. Now, I seen obviously this M formation, and this morning around 9 o'clock, I seen it make a pullback. Now, it didn't make a pullback to this neckline, and sometimes it doesn't do that. You can even look on smaller time frames and find these M formations. Like if you see this M formation right here, or double top, and you can see that pull back to this neckline, and you could have sold right here, and that was like, I don't know how many pips. It wasn't much, like 20 pips. But you can get an idea of, when you see these smaller structures, you're going to get a smaller risk to reward. But what I'm going to share with you is what I did this morning. And that is around 9 o'clock, I seen price in this level right here. So I took my Fibonacci from the swing high to the swing low at the time, because it was right here. So it's the swing low, that's the swing high. And I seen price right in this golden zone between the 50% and 62%. So, I actually didn't even wait for my confirmations. I usually like to see price under my EMAs if I'm gonna, take a short, and above my EMAs if I'm gonna take a long. But I jumped right into the trade, which I don't suggest ever. But I jumped into the trade around here, and I got like 30 pips because I took it down to the negative 25%. And it was definitely a 1 to 3 risk to reward. I had set my stop loss like right above the 71% Fibonacci level, which is like right here. Yeah, and it was a 1 to 3. So I took that trade. It hit my take profit, and it's starting to retrace again. But I do believe that price can be making its way down to this level that we marked off on a daily, which is the 38.2 Fibonacci retracement level, right? Now, from a COT point of view, which is the Commitments of Trader report that's released every week, and it's what the hedge funds are doing in the market, we see that there was a massive amount of longs and shorts added this week, right? And we know that GU is overall bullish, so we can expect large amounts of longs to be added. But for this amount of shorts to be added, definitely gives me a confirmation for that pullback to the downside, which we are looking at right here. And I'll show you on a 4-hour once again. We're looking for that pullback to possibly grab some liquidity and continue this push to the upside. We know these big banks, these guys they've got big positions to be fulfilled, to be filled. So in my eyes, it makes sense that, they'd push price down to a level of this area or even this area before making a massive move to the upside. Now, that's just my thoughts. I could very well be wrong, but so far it's been working out for me. Um, like I said, I took this small trade this morning. It wasn't even like 2 hours, I don't even think. And oh, it actually was. I'm lying. It was 1, 2, 3, 4, 5, 6. It was 6 hours. Oh no, I'm sorry. 4 hours. But my point is that from a swing trading point of view, there are still some good risk to reward setups that you can take from a short perspective. Now, if you're looking to long, I'd definitely be waiting for price to get into these areas. If they do get into these areas, and checking on higher time frames for price to shift from a bearish environment to a bullish environment to jump into a trade to long. So yeah, that's pretty much everything I got on GU right now. I wanted to share that with you guys. Let me know what you think. Give me your thoughts in the comments below. And yeah, talk to me, man. I definitely want to see what y'all think about this and get your insight as well. And if you have any other pairs that you're interested in me reviewing or doing an analysis on, definitely leave a comment below so I could check it out and do one. All right. So that's it for right now. And I'll catch y'all guys later. All right. Take care.